And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And we did have another highly volatile week. We did end on a negative note overall. However, the broader markets had a very interesting ending on Friday with a last minute push higher. We'll get into all of that and a lot more. Let's first go ahead and review some of the news that drove price action last week. Pretty busy week with some heavyweight items. Of course, front and center was Nvidia's earnings report released on Wednesday. Very, very closely watched. And the numbers were not overly exciting. They did come in with numbers above estimates, but only by a small margin. And the day on Thursday, Nvidia did pull back pretty sharply, but again, an interesting ending to the week. We're going to dive into that particular name. We also did see core inflation data that came out on Friday today, and it came in as expected. So no big surprise there. However, earlier in the week, we did see consumer confidence drop to an 8-month low, and that certainly did rattle the market. That, as well as Trump's continued discussion and talk about tariffs coming. So that has investors a bit unnerved. So we're going to take a look at these markets and see what is working, what is not working. You want to be aware of the shift that we've been talking about on this show for the last couple of weeks, and then look at that relative to what we can anticipate going forward. So let's go ahead. Also, before I share a view of the broader markets, of note, next week we will get the employment data for February. So that's going to be that key data you will want to be aware of. So from here, let's go ahead and take a look at the S&P 500 to see where did we close for the week. And here we are, a daily price chart of the S&P 500. And here is that volatility as far as the markets back and forth, but net ending in negative territory, well below this key 50-day simple moving average. And we do now have a negative RSI and MACD. Now let's go ahead quickly. We're going to take a look at an intraday chart just to share with you that close into the week, the end of the week. This is a 15-minute intraday chart of the S&P, and you can see we had that ending there that was quite bullish on heavy volume, and we will be, of course, interested to see, do we carry through with that? But let's take a look at other activity that took place last week. We're going to take a look at the Nasdaq, and that particular area did suffer. We're going to look at the Nasdaq composite on the daily, and it was down almost 4.5%. So a couple of things of note here with this Nasdaq composite. First up is the fact that we are well below that 50-day simple moving average, almost into an oversold condition. You're not going to see that too often on a broader market index. And then also you can see that we are getting into oversold condition with our momentum indicator MACD down here as well. So we did find support at this 200-day simple moving average. Good news there. However, we are going to have to do quite a bit more work before the Nasdaq gets back into a bullish position, making it certainly safe to get back in. There are people, of course, that could very well be interested in buying the dip, but from my work, you do want to be safe so that you know that any potential new uptrend has those characteristics to carry and see us through, and with some follow through. So here we are with the 11 underlying sectors within the S&P 500. And this is where it gets interesting as far as drilling down to those areas that are outperforming. We have a 2-month daily price chart view of the 11 sectors. And as you can see, we have the S&P down here in the weaker quartile. Up here are your stronger sectors relatively. And yet again, we are seeing a more defensive feel to the markets. We have REIT stocks up here at the forefront, XLP consumer staples, and then financials. I will share with you one area in here that was very strong last week, generally viewed as a defensive area, and then also healthcare, another defensive area up here at the forefront. As usual, you do want to be aware of those weaker areas that were down more than the S&P 500. And first up here is technology. This is XLK, and the group was down almost 5%. And we can see it did close below this 200-day simple moving average. Now, whether it is enough as far as presenting us with an opportunity to rebound, you will want, this is something I review a lot with my twice weekly MEM Edge report, as well as here, the fact that you want to have historical precedent. Go ahead and we'll take a look at some of these other periods. This is that July into August sharp pullback on that yen carry crisis. And you can see that we did get well below. We got down here, difficult to see, but it is well below that 200-day simple moving average. Have in mind those characteristics as far as identifying when this particular group has returned back into an uptrend, and that would be this September period. And you can see that since then, tech was in very good condition until this recent sell-off. So also on this negative front, let's take a look at discretionary, another area I've been reviewing as it continues to deteriorate. We are seeing retail sales numbers coming in very weak, consumer confidence, and then of course those tariff fears driving these discretionary retailer names down. But we did get into an oversold position. This is XLY. You can see that RSI got down there below 30, and then this nice close into today up about 1.5%. And you can see we could potentially bounce from here, but we are still in those beginning early stages. So there is going to need to be a bit more work done before we can get excited about these growthier tech and discretionary areas, and also industrial, something I covered last week as far as those economically sensitive areas just overall underperforming and suffering. Now, from here, let's get beyond those sectors. We're going to drill down even further using ETFs. And again, a 2-month daily price chart view sorted by relative strength up here at the forefront. Not what you want to see, but we do have volatility. And it did get up again. Yes, this week it did get as high as 22.4, but we closed at 19.5, but we are still elevated. Anything above that 18 level is viewed as increased volatility, better known as the fear index. So you'll want to be aware of that. However, the markets do like to climb that wall of worry. So it will be interesting to see how we progress going into the coming weeks with the employment data next week and a couple of more big earnings reports. And also up here at the forefront, healthcare, this is IHI. It is beginning to deteriorate, but it's the medical products. It's an area in that healthcare that had really outperformed, struggling a little bit here, but still up there in the outperforming area in the forefront of these ETFs. Of note, semiconductors. So we talked about Nvidia, and even though the stock did rally today, we're going to take a close look at that stock. It did end the week down 9%, and you can see this clear-cut deterioration, negative MACD, negative RSI on the overall semiconductor industry grouping. And again, another area highly volatile, very, very sensitive to economic potential slowing. And you can see back here, again, this is that July into August period that we reviewed earlier and what it would take to potentially recover. And then also down here, this is generally good news, and that is the yield on that 10-year treasury. We ended at 4.2% for the week, much better than up here at that 4.5 level where we had been residing and then higher. So the one good news here again is that we are seeing the yield on that 10-year, and I'll share with you some of the impact with that declining yield taking shape there. Of note is that small cap stocks, this is IWM, the Russell 2000 index, down another 2%. This is an area that, again, any signs of economic weakness potentially will hurt small cap stocks, and you can see that they are very much in a downtrend. Also taking a look, we did look at semiconductors. Let's take a look at XRT. This is that retail ETF, and it's going to impact those consumer discretionary. We talked about retailers pretty much in a free fall at this point in time. Interesting, we'll take a look at some names that are withstanding that downward pressure there, but overall net negative. Also IGV, the extended tech software sector, and we can see that it too is continuing under selling pressure. We are below, just getting a bit below this low from the beginning of the year, which for a number of these certainly growth areas, that is going to be your area of support. If we undercut that, it would not be particularly good news. And home builders saw a little bit of a bounce with that drop in interest rates, but still very much in a confirmed downtrend. So from here, we're going to take a look at Nvidia being such a big component and certainly widely owned stock. We'll take a couple of different views here. First up, I am going to go ahead over and we can begin by taking a look at a daily chart of Nvidia, and you can see this is that 200-day simple moving average. We did break below that. Thursday was a very tough day for the stock. Pretty high volume on that selling, and now we do have negative RSI and negative MACD at this point in time. And from here, you will want to take a look at the weekly chart. That's going to provide you with a longer term outlook or perspective. And on the weekly chart for Nvidia, we do now have a negative RSI. Now, that's not a sell signal. We did experience similar pullback on that weekly chart back here in the beginning of the year, and we were able to recover somewhat. But it is certainly of note that longer term, we are entering into a potential negative period here for Nvidia. And then we do have that downward sloping MACD on the weekly chart. Now, the good news is on this weekly chart, you'll want to pay attention because when we do get that turn, and this is something that I was able to capitalize on with my MEM Edge subscribers, we can go back here to the beginning of 2024 when I added the stock back. When we do eventually get that black line up through the red on the longer term weekly, it's going to be quite compelling. Now, we did have that take shape last fall. However, it was from an elevated position. Ideally, when we have that MACD crossover on a longer term chart, you want it to take place very close to this zero level. So as we do descend here, it is eventually going to set up as a nice buy. We are in a bit of a back and fill formation here with the price action. So keeping an eye on that weekly is going to be helpful. I would do that. And then also from here, we're going to drill down to an intraday 1 hour chart of Nvidia, similar to the broader markets. We did see the last hour in the markets a little bit bullish, not overly by any stretch, but certainly let's take a look and go ahead and annotate this chart because you want to have prior precedent as your guide. So first up on the hourly, we are close. We're not quite there yet, but you will want that RSI. This is for shorter term investors. You will want to get that RSI back up here above that net neutral, get it in above 50. And then also we want this MACD to enter into positive territory. Good news, we are above the 5 and 13 hour simple moving average. So quite simply, going back to precedents, we can mark this up, and I will share with you a period of prior precedents where those characteristics did take shape, where the stock closed above the 5 and 13, that MACD got into positive territory, and we had a positive RSI. Now, from there, the stock did go from about 123 up to 143. So again, very nimble, shorter term investors can use that intraday and then, of course, have those signals that would indicate negative near term price action. And from here, we're going to take a look at areas of the market in addition to using those ETFs, the sector and various sub-industry groupings. And what I did want to share with you is the fact that there are areas of the market that are holding in really quite well. They are not totally immune, but they are doing well relative to those high growth areas. So this is a ETF list of ETFs that do have high dividends. So first up, we're going to take a quick look at SPLV. This is the Invesco S&P Low Volatility ETF. And from here, I'll just go ahead and cycle through a couple of this ETF's top holdings. First up is Coke. You can see it's had that sharp advance with their new probiotic bubbly beverage that is faring quite well. Here's that gap up on earnings into a nice uptrend. Second holding in that ETF that we were looking at, that low volatility RSG. This is Republic Services Waste Management Company. Regardless of the economy, there's still going to be a need for their services. Nice gap up after earnings into an uptrend. BSX is the top name in that medical products space, BSX. So in essence, these are the areas that low volatility. Many of these names do offer a yield and they are faring quite well. This is MasterCard poised to break out. You're not seeing this elsewhere in those super high growth names. Visa up there hitting a new high in price. And then from here, another area that I did want to share with you and see if I can pull up my other list. You can see I've been using Stockcharts.com very religiously for many years. So I have some what I view to be very, very insightful list. But what I did want to share with you are what are called the dividend aristocrats. These are names that are in the market that have been increasing their yields every year for a number of years. So they're going to be very well-known names. So with the decline in interest rates, in yields, as well as that volatility and uncertainty, we are seeing a move into these higher yielding, generally lower volatile names. So first up, we can take a look at ABBV, another big winner after this gap up on earnings. And we'll just go very quickly go ahead and pull up that full quote again so that you can experience that view that provides you with quite a bit more information. Here is their earnings date, and we can see here at that gap up, and then also that yield. So it's going to give you that forward dividend, that forward yield, and also PE and other relevant information. So as we cycle through, I'll share a couple of other of these names, but really what we want to do is go ahead and view it as that candle glance view with that relative strength. And so you'll be able to up here at the forefront, Abbott Labs ABT sitting up here quite nicely. Johnson & Johnson is faring quite well among those big pharmaceutical companies. And so again, the purpose of this is to share with you the fact that these nice higher yielding, lower volatility stocks are certainly seeing a lot of traction. From here, I did talk to you about the financial sector. Let's take another quick look at XLF, and it did have a good week. Certainly, it was up relative to the broader market's top performer, up almost 2%. Nice rally there. So we're going to go ahead and drill down. I'll share with you one area that really stood out this week. There were some bank stocks that fared well, but by and large, it was insurance stocks. This is Aflac, and the companies. So as we go through these, I will share with you AFL is trading at 15 times earning. Let's take a look at MetLife, MET, another winner into the close for the week. This stock is a 2.5% yielder, and it is trading at 10 times earnings. So a couple of factors that are making these insurance companies interesting is the fact that they are trading at lower multiples. They are offering higher yields and also have been reporting generally strong numbers. Here's PFG. This is Principal Financial Group, and the stock's trading at about 13 times, and it has a 3.4% yield. It is in the insurance space. I'll share with you one other name here, PLMR, and that is PLMR, a little bit of a smaller company, but you can see here's that gap up on earnings, orderly pullback to that 10-day, and then a base breakout today. So again, in the financials, that is where we are seeing quite a bit of vibrancy. And then from here, I did want to share with you some other ETFs that can be really quite helpful as far as wrapping your arms around what is shaping up and taking place as these higher PE, higher growth names are coming under selling pressure. So what we are looking at here is VUG. This is the Vanguard Growth ETF, and you can see how we are now down in a downtrend. We'll go ahead and pull up a weekly on this chart. It was down about 2.5% for the week. Again, there's that buying into the end of the week. So interesting to see how that fares. From here, we're going to take a look at VTV, and this is the Vanguard Value Fund. And you can see certainly it was not an outperformer by any stretch, but we are in that back and fill formation. And these value funds, such as the names that I've been sharing with you, have been faring well. And last up, one area that I did want to share with you in keeping your arms around the volatility in the markets. Is it safe to get back in? Oftentimes, it can be very helpful. Quite simply, on this initial interface page, we have equities providing you with the information for the various indices, bonds. We talked about yields dropping, commodities, and so on. So here we are with this last tab, and we're looking at crypto. And I wanted to share with you Bitcoin because it is certainly the most liquid, most widely followed of those names. And we can see that Bitcoin has fallen off. So very similar to IWM with those small caps, it is a proxy for the risk appetite among investors. And we certainly did see Bitcoin sell off very sharply this week. That's it for this week. Everyone have a fantastic weekend. Go ahead and use that like button if you like what you've seen. And be sure and use that trial button for a very nominal fee. You can trial my twice weekly MEM Edge Report, be kept up on the broader markets when it's safe to get back into those growth names, and a lot more. Have a great weekend.